Two, three. Hello, my beautiful people. Welcome to this educational course about hedging. A lot of you requested me to explain how do you hedge your positions, how do you place those anchors, and what kind of confirmations you wait for. For this, I will go in the past and we'll look at one of the first successful hedged that I've accomplished. We're looking at the pound yen H4. This is the huge impulsion we had in 2019. Okay, October, so fall 2019, and so I've hedged. In the past, I was long here. Okay, so let me walk you through exactly what happened. So basically, I saw that we had a reversal pattern here. Okay, we're rejecting that key level here, and I wanted to go long, so I went long. I believe I went long. I think like here or something. Okay, I have my stops below. That was like if we break that low, for me was like that long is not no longer valid. So I went long here, and then I waited, and I had a drawdown, and then a nice rejection, and then you can see like wave one, wave two, okay, and usually that's just a correction, and then usually wave three, can you before the wave three you can have a massive correction, if you call it ABC correction, whatever you want. um, but that was basically it. And then how do you know, like, okay, we're in a downtrend and we're gonna make a 500, 300, 500 pip correction, right? Okay, that was roughly 400 pip correction. So what I did here is basically I was long here, okay, and now we were here, okay. So what I did is I have my trend line here, okay, and then we broke out of it. So what you want to do is just reanalyze the market like you want to go short. So it's basically a break. Then we have our trend line here and our 38 fib retest of that breakout, because usually when we break, if you're not going to enter at that retest right here, you are going to want to enter at the next high, and usually they're at the 38 or 50% or 61.8. Okay, so you want to look around these levels. I went short on the 38 year. Okay, then what I did is my bias was long pound yen at that time. Okay, I had that support here that I was looking for. So when we went here, I went long another position. Now you would say, okay, did you close that short? Yes, I did. So let's say I've opened. I would have closed, let's say 25% of my short, put it at break even, and then I went long again here. Okay, but I don't go long full in. I'm not gonna go long. Let's say this time I was trading like 2.5 lots, something like that. I think 3 lots. That was like my average lot at that time, 2019. So a 3 lot here, I'm not gonna open a 3 lot. I'm gonna open 25 or 50% of my short anchor hedge. Okay, so if I've entered a short of 1 lot, I'll enter 0.50, 0.25 here long. Okay, then you just put at break even, because remember, you can secure some profits of an edge if you want to, but the main goal of that hedge is to just look what happened here. We had a breakout and a move much lower. I went long here, and then we kept going 300 pips, almost 300 pips down. Now, if I would have entered a buy here without a short, I would have freaked out, right? And because I've entered only 50% of my short here, when we were here, I didn't my total balance was not in the negative, because I still had my long here and I had a short here. And then what I did is every time we had a support created, I went long again. So I went long. Oh, sorry. I went long here. Okay, and I think I shorted here as well. When we break retest that level, I shorted right here and kept my long, because I had my other long like support was here. So the high here, top of the high here, and we had a wick here. So that was like my final destination for my short hedge. But we could have gone all the way back and retested the bottom. You know, you don't know, but you want to keep your longs because the bias on 2-3 months of 2-3 months is long. So you just want to, the trick here is to have targets. So the final target for myself was here. Okay, so went long here, 50% of my short here, then shorted again. Then I remember I went long here again on that support here, 25-50% of that short here. So one lot here, I had open long 0.50, and then boom again. And then at that point, just went long one last time. And the next long I did was when we broke out of that trend line. When we broke out of that trend line, okay, that's a nice fake out here, and you can also put a trend line right here like that, and then it'll give you a good, a good perspective. So for myself, you don't want to remember that. I remember very, very precisely that we broke out of that trend line here. Okay, we did that huge bullish, and remember, all my shorts, all my hedges are at break even very, very fast. Okay, after 50 pips, not even 30-50 pips, I put them at break even. Okay, because remember, the bias is long. So after that, when we have that huge bullish candle, I had longs here, here, and here, and I still had that short. And I remember my friend was like, close that short, take 30 pips, profits, whatever, 60 pip profit, let's secure them. But no, that's not the point. You don't close. You can secure a portion of your hedge if you want to, like I said, but you don't want to close all of it, because we could have gone here, right here, and then boom, massive move down, and I've been fucked and pissed, right? So I holded it. I went break even, and then boom, went high, and again, same principle here. We have that high here, break, retest, another long here, and then I remember trading it. That's that move. We just looked at this move right here. So see this move here? We had the final take profit was at this massive trend line here. Okay, so that was again new longs here, beautiful support, very simple, and then move up. Okay, that's a swing trade. That's a massive fucking swing trade, and I've succeeded in hedging it at that massive correction, 400 pip correction. So remember, the basic rules of hedging, if you don't want to get fucked, is don't be greedy with your hedge. They're not trades. Okay, if you want to secure some profits, a portion of it, that's fine. But always remember, the main goal of these hedge, of these anchors, is to not freak out and have the confidence to enter longs at different levels. Because it's okay if you go long here and then you have another drawdown to the new level, because your bias is long. Your long-term bias is long, so it's fine. But your hedge are going to allow you to feel safe, because you know that if you have a drawdown, forget about going long here, and then you see that massive rejection of that trend line, everyone would have stop loss and closed it here. Boom, you're like, oh my god, it's gonna drop 400 pips. But myself, I didn't care, because I had those shorts covering. If we went all the way here, I would have still had my balance at break even, because remember, I'm opening longs, but I'm opening a small portion, 25-50% of my short hedges. Do you understand? And then I ride it all the way up, because my main position is here at the bottom, and then here. Okay, so and I think I've entered. I opened like a, like a 5 lot here, if I remember. It was pretty intense. Um, I was pretty proud of myself. 5 or 10 lots even. I That was a really great trade. I don't remember exactly, but I could go back in my journal and see what exactly positions I've took. But so remember that. Very important if you want to hedge your trades. Don't be greedy, okay? Respect the patterns, draw your levels, and then think long term. Don't hedge your trades if you have a short-term intraday trade. That's not what you want to do. You want to wait for big swing trades to do this successfully. Okay, guys, I hope it helped you. Peace.